SoFi stock had an amazing year. We can see year to date, the stock is up nearly 126%. On today's episode, what I want to do is take a closer look at some of the bullish cases that this company can see in 2024. And no, it's not going to be your typical member growth, product growth, but a lot of other solutions that SoFi has that can obviously help boost investor confidence and revenue in the long term of things. So let's take a closer look in today's episode.
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
Before we get started, I do want to say I have a position in SoFi Technologies. I did purchase on November 10th for an average of 675 is my cost basis. SoFi is not a big position in my portfolio like my semiconductor positions, but I do believe the fintech market definitely has numerous opportunities in 2024. All right, so let's start off with the presentation that I have worked out. And like I mentioned, today I don't want to talk about members and all that as being one of the four growth opportunities that I believe SoFi can see. But I do believe that if you're not a shareholder or if you don't follow this company, these are numbers and things that you should be familiarized. And we can see overall SoFi continues to grow in members. They have record new members in their quarter three to sitting at roughly 6.9 million users now, nearly 7 million. It was up 47% year over year, and we continue to see that sequential growth. Again, these are not reasons while they are reasons I'm bullish, these are not the reasons I'm bullish for in 2024. I do believe there's more growth opportunities outside of what you normally hear for SoFi. But we can see their products continue to grow on a year-over-year basis. On a quarter-over-quarter basis, we can see their lending products, their financial service products also up on the 24% and others 50% year over year. Most important, their Galileo accounts are also up on a sequential and year over year basis. So I do believe these are numbers. These are just kind of like your top level. If you're ever somewhat bullish on SoFi, those are probably the numbers that are always discussed. Now, for me, some of the reasons to be bullish. So reason number one is just growth in their overall solutions that they're seeing. And this is in various markets that they hit, right? So for example, SoFi Money, they did recently saw a nice growth of accounts there, and they are gaining market share from larger institutions. One of the biggest reasons is they are being very competitive with their kind of interest that they're giving on checkings and savings. And me personally, I continue to look places to park some of my money, save money in forms of like high yield savings. And one that always shows up is SoFi, right? Yes, they do have that kind of competitive, they're kind of competitive solutions there. The other kind of growth opportunity that they have is the loan refinancings. More importantly, student loan refinancing. They have a huge market here. They mentioned that they dominate with a 60% market share in refinancing right now. And especially right now, as we are seeing kind of this post-CARES Act, there's a huge significant opportunities for them to continue to grow here. Another one is the personal loans. And most recently, they shared that they hold roughly 9.5% of the market share here. And if they continue to grow in this space, obviously that's plenty of revenue opportunity for them. Now, if we take a closer look at home loans, this is a very minuscule market share that they have here, but they're continuing to grow. Again, just from prior experience, my brother-in-law just purchased the house, and one of the places that they were looking for home mortgages was SoFi. So SoFi is becoming, I want to say, a more pronounced name when you're kind of looking at a lot of these financial products. So I do believe that's very important. So that's reason number one. Reason number two is just they do have strong risk management. I forget if they mentioned this in their most recent earnings or their most recent conference that they had on December. But they do mention that they're really doing pretty strong when doing selective underwritings on loans. For example, they're focusing on high prime customers. They do mention that their average FICO credit score is roughly 746 for personal loans. That's pretty high. And most of these people are with substantial income of 160,000 and more. So we can see that SoFi is very strong here in kind of their risk management. And I do believe that's very important, especially with the kind of macroeconomic environment that we're in right now. They're focusing on those high prime customers, which does both well. Now, reason number three is going to be new products. But before we go there, guys, I do want to say thank you for the support. Check out, make sure if you haven't, make sure to hit the thumbs up, the subscribe button. I'm trying to hit 30,000 by the end of the year. We only have a few days left. I don't think we're gonna do it, but I just still want to keep going for that goal for the end of the year. So who knows? Maybe this video might be the one. So reason number three is new products and kind of new market opportunities. So one of the new products that they mentioned during their most recent earnings is they are expanding their offerings to, for example, the corporate credit market. They recently launched a corporate credit solution, which is designed to modernize expense management and expansion of buy now, pay later offerings for small businesses working capital loans. So obviously they are expanding in that market. The second is geographic expansion. They did also mention that they recently received a MasterCard certification to expand payment cards and processing services in 5 new Latin America countries. So obviously we are seeing kind of that expansion into other geographic regions and that international growth, which can also kind of produce good benefits and good revenue growth over the upcoming quarters. The final new product is their AI-driven digital assistant Connecta, I'm pretty sure is the name, and it's the introduction of a natural language AI-driven intelligent digital system to enhance customer service efficiency. And this is where kind of their tech platform continues to grow, especially with that kind of Galileo acquisition that this company did a few years ago. And now they are integrating this into SOFI solutions. And by doing this, we can kind of see that by significantly lower latency, Cyberbank enables SoFi to achieve four key performance indicator. They did see an increased chat containment by up to 5%. They did see a decreased response time. They did see an enhance in agent efficiency, and they are seeing greater member engagement as well. So obviously, we can see that SoFi is also bringing their AI solutions here into their kind of regular products into their consumer hands as well. And I do believe not many people talk about these AI solutions, but seeing an improvement in customer retention and just customer efficiency can obviously bode well and kind of allow, if you have a great experience with a company's AI solution, you're definitely, and just not even an AI solution, just with the company, you're more likely to recommend them. And if they are seeing improvements with this AI driven digital assistant, then obviously that bodes well for SoFi and customer interaction. Now, scenario four, and this is the last one I have, is just overall revenue breakdown. If we take a closer look at their most recent segments, we can see most of the market and revenue is coming from the lending segment, and that's roughly $342 million. That showed a 15% year over year increase. Most of the lending segment is seeing a huge growth thanks to net interest income and strategic loan portfolio management. Now, their second biggest position is the financial service, which was up 142% year over year, revenue of 118 million, driven by increased monetization and product expansion here. The third biggest segment is their technology platform, which saw 90 million, up 6% year over year, reflecting the successful integration and growth of SoFi tech-based services, some of that Galileo solutions there. So if we take a closer look, most of the revenue growth is coming from some of those smaller segments, especially the financial segment, which saw that 142% year over year growth. So the revenue breakdown right now is really leaning to one side, but SoFi does believe that in the upcoming years, their revenue is going to be more balanced. They believe it's going to be 1/3 lending segment, 1/3 technology platform, 1/3 financial services. And for that to happen, we do expect strong growth in technology platforms and strong growth in financial services. And obviously, this is going to continue to see that revenue growth for SoFi in the upcoming years. So these are the four reasons that I believe SoFi can actually have a strong year in 2024, as I do believe all these opportunities can be successful in this upcoming year. So I hope you guys enjoyed today's episode. Take care, have a good day, and see you next time.